Electric vehicles are expected to account for a quarter of all car sales worldwide by 2030. That's a huge jump from where we are today. However, recent trends show a slowdown in sales, which looks really concerning. Let's find out the real reason behind it. EVs offer a clean and efficient way to drive, but the lack of charging infrastructure creates a significant hurdle for potential buyers. Charging anxiety, here's a closer look at the issue. In the United States, as of 2022, there were only around 40,000 public charging stations. Experts estimate we'll need over 180,000 by the end of the decade to keep up with EV adoption. This significant gap means finding a charger can be difficult, especially for those who don't have access to home charging. Not all charging stations are created equal. Level 2 chargers, which are more common, take hours to fully charge a battery. Level 3 DC fast chargers are much quicker, but they're less widespread and can be more expensive to use. So, even if you find a station, a quick top-up might not be an option. Most charging stations are concentrated in urban areas. This leaves rural drivers or those who frequently take road trips with limited options. Planning a long journey can become a meticulous exercise in mapping out charging stops, adding stress and potentially impacting travel time. The lack of sufficient charging infrastructure creates a significant barrier to EV adoption. It makes EVs a less practical choice for many drivers, particularly those who don't have access to home charging. Until this gap is bridged, widespread EV use will remain a challenge. Electric vehicles boast environmental benefits, but their high price tags are a major roadblock to widespread adoption. The average price of a new EV in the United States sits between $50,000 and $60,000. This is a significant jump compared to gasoline-powered cars, where the average price falls closer to $30,000. This price difference puts EVs firmly in luxury car territory, out of reach for most middle-class families. Government incentives and manufacturer rebates can help bring down the cost of EVs. However, these incentives often have limitations or phase-out periods. Even with these aids, the overall price tag of EVs remains a significant barrier for many potential buyers. Currently, the EV market is dominated by high-end models from luxury car makers. There is a lack of affordable mass-market EVs that can directly compete with gasoline cars in terms of price. Until car manufacturers can bridge this gap and offer EVs at a price point comparable to gasoline cars, widespread adoption will be limited. The high cost of EVs creates a significant hurdle for the average consumer. Closing the affordability gap through a combination of technological advancements, production cost reductions, and sustained government incentives will be crucial for EVs to become a mainstream transportation option. The initial rush towards rapid EV adoption seems to be losing momentum. Let's explore why some car makers are hitting the brakes on their EV plans. Developing and building EVs is expensive. Battery technology is still evolving, and production processes require significant investments. Many car makers are struggling to turn a profit in EVs, especially with slower than expected sales. This financial pressure is causing some to reevaluate their aggressive EV rollouts. Faced with profitability challenges, car makers are rethinking their EV strategies. Some are focusing on luxury models with higher margins, while others are delaying the launch of new EV models. This shift in strategy indicates a potential slowdown in the overall pace of EV development. The slowdown in EV sales and profitability challenges raises a question. Will car makers be able to find a way to make EVs financially viable products? This will depend on advancements in battery technology, reductions in production costs, and potentially increased government support for the EV industry. The initial excitement about EVs seems to be tempered by the harsh reality of the bottom line. Car makers need to find ways to make EVs profitable if they are to continue investing heavily in this technology. The future of the EV revolution hinges on their ability to do so. Electric vehicles are often considered as the environmentally friendly alternative, but the picture isn't entirely black and white. Let's explore the factors that contribute to this complexity. The production of lithium-ion batteries, which power most EVs, can have a significant environmental impact. Mining the raw materials like lithium and cobalt can be resource-intensive and potentially cause pollution. Additionally, the disposal of used batteries raises concerns about potential environmental hazards. For EVs to be truly clean, the electricity they use needs to come from renewable sources like solar or wind power. However, the reality is that a significant portion of the world's electricity grid still relies on fossil fuels like coal and natural gas. This means that even though EVs produce zero tailpipe emissions, they might indirectly contribute to greenhouse gas emissions through the power plants that generate their electricity. Renewable energy sources are becoming increasingly affordable and accessible. As the grid transitions towards cleaner sources of power, the environmental benefits of EVs will become more pronounced. However, this transition is still ongoing, and currently, the green credentials of EVs can be somewhat overshadowed by the reliance on fossil fuel-powered grids. The environmental benefits of EVs are undeniable, but there are aspects of the production process and reliance on the current grid that raise questions about their overall cleanliness. Continued advancements in battery technology, a shift towards renewable energy sources, and responsible battery recycling practices are all crucial for EVs to live up to their full environmental potential. Switching to an EV means a change in lifestyle. Gone are the days of quick gas station stops, charging takes time, and range anxiety is a real thing. Road trips become meticulous planning exercises. For many people, this isn't just realistic. The used car market is a vital part of the overall auto industry, but for EVs, it's a different story. Let's explore the reasons why the used EV market is still underdeveloped. New EVs tend to depreciate faster than gasoline cars in their initial years. This is partly due to the rapidly evolving battery technology and the uncertainty surrounding battery life and replacement costs. As a result, potential used EV buyers might be hesitant due to concerns about the car's long-term value. Since EVs are a relatively new technology in the mainstream market, the overall pool of used EVs is much smaller compared to gasoline cars. This limited selection makes it harder for potential buyers to find the specific model, features, and price point they're looking for in a used EV. One of the biggest concerns for potential used EV buyers is the cost of battery replacement. EV batteries can degrade over time, and depending on the model and age, replacing them can be expensive. This uncertainty adds another layer of risk to buying a used EV, potentially discouraging some buyers. The development of a robust used EV market is crucial for wider EV adoption. As battery technology matures, depreciation rates stabilize and the overall volume of used EVs increases. This market segment will become more attractive to budget-conscious buyers. This, in turn, could accelerate the overall growth of EV ownership. The environmental benefits of EVs are undeniable. So, what does this all mean? Does it mean EVs are doomed? Not necessarily, but it does mean that the EV revolution might need a course correction. We need more affordable cars, a massive investment in charging infrastructure, and cleaner energy sources to power the grid. Otherwise, that electric revolution might just end up stuck in traffic. Thanks for watching. Let us know in the comments below what are your thoughts on the future of EVs. Don't forget to like this video and subscribe to the channel for more EV talks.